G'day folks, welcome back to Pete's Investing. It's March the 8th, 2024. This is the Nat Gas technical analysis. We're also looking at some ETFs. Now, the market has reached a slight bounce. We've hit a bearish divergence and that's pulled back overnight. And we've also just got to be careful of a Fibonacci retrace if it's being reached in terms of a minor support level. In terms of some news, natural gas futures are currently cautiously optimistic despite a potential bearish EIA storage report showing a smaller than average draw due to warm weather. Production cuts by major players like EQT and Chesapeake are offering some support, and the short-term trend is upward. While a price dip might occur initially on the report, a bullish outlook remains in the short term due to production cuts and a modest demand increase. A long-term bullish position might be premature due to remaining shorts in the market. So first off, looking at the natural gas commodity price, the weekly the weekly's in a bearish mode according to the ADX 25 down here. Also, the CCI 150 is also below its moving average band. On the daily, we might be we're still bearish, but possibly breaking to the upside if it wasn't for that big bearish candle previous night. And you can see there the CCI is coming back down and resting on the moving average band. These indicators, by the way, are all in the description below to understand how to draw them on your charting software. Now, notice also on the daily, I'll zoom out on this one, we did bounce up midpoint between a 23 and a 38% level of the Fibonacci retrace of that range. There was a bullish divergence there versus that little lower lows on the price there. And plus we had these bunch of blue arrows which indicate a bounce. And they're scattered throughout the whole charting software, and that's one of the other indicators I've written recently. Again, that's available in the description to understand how to identify those potential tops and bottoms. It doesn't always pick the extreme top, but where you get a cluster of arrows, red arrows there, or blue arrows like that, you can see there has generally been a bounce throughout the whole history. That's on the daily, but it happens through any time frame if you apply it. On the hourly, likewise, we'll just talk about those arrows first. You can see there a big cluster there, and the price fell off. And there's more clusters indicating a decline. Again, not a full correction, but just a decline in the price. Currently, we've got no arrows indicated there. So again, I'd like to see a cluster, not just one individual arrow. Now, this is the hourly chart. We've got the ADX 25 showing bearish outlook. The CCI dropped below its moving average band. Now, since our previous video, we did project this bearish divergence between those highs on the CCI 150 versus higher highs on the price. Now in this case, the price kept rising, and the way we read this is we go up to the highest point on the price. So long as the price keeps rising and the CCI remains, the peak height of the CCI remains below that previous peak, then we're going to consider that as a bearish divergence, which it did actually work here. The CCI kept falling off. The price actually fell off, and the way you could have traded this was drawing a trend line between those bottoms. Again, proper way to draw trend lines is at least between 2 or 3 touch points, and when it broke through there, that sort of would have been a nice area to go short, and the target range there would have been the 23 to the 38% Fibonacci range between the previous point before we started the divergence. So it would have been back there, that low, to that previous high. And our target range is between the 23 and the 38% level as a minimum. Now in this case, it's bounced through that, or penetrated through that 38% level. And the key area we have to look out for is this 61%. If it breaks through there much below that point there, we're going to see a much more bearish outlook for natural gas. There's no sign of a support at this level yet, so just be careful of that, but that'll be our next level at the 61%. That's the natural gas commodity price. Next we look at BOIL, B-O-I-L. Weekly we've got a bearish outlook, although there's a bullish divergence on the CCI. It's been doing that for a couple of years now almost, or one full year. On the daily we've got a bearish breakout to the downside, although we had a bullish divergence here, and that's still in play. It hasn't actually completed, so that's still in play. Remember the rules. As long as these lows remain higher than the entry low and the lows on the price keep dropping, we're going to keep that in play. At this point, it could be the start of a bounce to the upside, although we did have a big bearish candle there, so it may actually fall further possibly, so we don't know yet. On the hourly, we've got a bearish outlook here, and that also confirms with, similar to the natural gas commodity price, there was not really a bearish divergence. You can see that high is higher than that, and that high was higher than that. So it wasn't really a bearish divergence, but using the commodity price chart as an indicator in terms of where natural gas was heading, that would have been a potential trade you could have taken in alignment with the natural gas commodity price. Next, we've got the ETF KOLD, bullish on the ADX, bullish movement on the CCI 150 in line with the price movement. On the daily, bearish on the ADX. You can see there we had a bearish divergence versus a bullish movement on the price, and it fell off, and that broke through our target range, and it's actually bounced off from the 61%. Remember I said that 61% is a key area. It's either going to bounce from one of these Fibonacci levels, or if it breaks through that level significantly below, it's going to actually be a more bearish outlook. So this is a positive outlook for KOLD, at least. If it's bounced off that 61%, it may continue to the upside. On the hourly chart, bullish movement on the ADX. You can see there we also had a bullish divergence on the CCI versus a double bottom or a lower low on the price, and it bounced from there. Also, we've got those clusters of blue arrows, which indicates a bounce. Now, we had those clusters back there, but there was no real divergence in those instances that CCI moved in line with the price. So we try to use these clusters of arrows in line with any other indicator, such as the divergence. And again, using that trend line as an example, you could have taken a long position from there and ridden it to the upside. And again, just drawing that Fibonacci level, if I was to draw it from that low, going back, depends on where you draw it, it can be a bit subjective. I like drawing it to the minimum, to the previous high before the divergence started. So you could take it to there. You can see there it's just resting near the 61% level, or if you took it to that recent high there, it's actually sitting around the midpoint between the 23 and the 38%. So I like to look at these Fibonacci's step by step. It's a bit hard to read them in one go, so I'd like to read it in this case back to that high, and that would have been close to the 61%. If it breaks higher than that, this reversal may continue further to the upside. And lastly, we've got UNG. Again, it's got a bearish ADX, bullish movement on the CCI 150 versus the price. You can see lower lows on the price. It hasn't really started to bounce yet. On the daily, that's a fresh bearish outlook on the ADX, and we had a bullish divergence here on the CCI versus the price, and that could be the start of a further downfall on the price. So again, a big bearish candle there overnight. And on the hourly, similar to the net commodity price, is the ADX is bearish. It did actually, it wasn't really a divergence, but using the commodity price as an indicator, that would have been an area you could have gone short to take a little small trade. Again, there's no sign of a reversal yet. The next major support level is down here at 14.50.65. Next, we've got a trading idea. This is the natural gas commodity price. So I've got two time charts here. I've got the hourly chart in the green and the pink. This one's showing the average down approach. This one's showing a stop loss approach. And on the left here, we've got a daily chart, and we trade on the direction of the daily chart. And what we do is we also look at, if I zoom into this one, we also look at we've got these as Heikin-Ashi chart. So going long only when the Heikin-Ashi is green and short when the Heikin-Ashi is red. That's one of the parameters. But the main parameter or rule, trading rule, is when this CCI 150 breaks outside of that band. You can see that I've drawn this back test to start of there. That's where you take long positions only. So you would have taken long positions, and at the moment you would have stopped taking long positions because it's touching that band. So the average down approach would have generated 6,795, whereas the stop loss approach would have generated 2,145. Again, the rules for this are, just stay tuned to the end of the video. I've got the rules for both attached. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.